I would fully expect the dollar to be in serious decline. Between 1983 and 2002, I reckon, looking at those flows and all the rest of it, and contemporary prices, and remember we had a massive bear market in gold, which took it down to under $300 in 2002. I reckon that China could have accumulated by then something like 25,000 tons of gold. There are various other indicators that she had been doing this, such as her policy towards gold. None was allowed to leave the country, and it's still the case. And furthermore, she invested very heavily in mining capacity and refining capacity, so much so that China rapidly became the largest nation by mine output.
Welcome back to Money 101. China has consistently bolstered its gold reserves over the past 14 months, solidifying its position as the foremost purchaser of the precious metal in the last year. Recent data reveals a noteworthy addition of 9 tons, 290,000 ounces of gold in December 2023 alone, contributing to a total of 225 tons for the year. This accumulation brings the People's Bank of China's gold holdings to 7187 million ounces. Alasdair Macleod, the head of research at GoldMoney Inc., speculates that China, renowned for its cautious approach, might be exploring the potential of a return to the gold standard. Despite being the largest gold-producing nation since 1983, whether China will officially adopt a gold standard remains uncertain. Globally, central banks responding to geopolitical shifts away from the US dollar have engaged in substantial gold buying as a defensive strategy. In 2023, central banks globally acquired a record 374.1 tons of gold, as reported by the World Coin Council. Macleod observes that countries are contemplating the gold standard not as a proactive choice, but as a response to safeguard against evolving economic conditions. There is a growing inclination within the BRICS bloc to migrate major currencies onto gold standards, with Russia likely taking the lead, followed by China. The initial transition to a gold-backed trade currency could potentially undermine the purchasing power of the US dollar. For instance, Russia is considering tying the ruble to gold, seeking to make the currency less dependent on US dollar comparisons. This involves mandating the use of the ruble for significant exports and increasing Russia's gold reserves. Stay tuned for clips from Alasdair Macleod's interview with Liberty and Finance. If you're interested in more content like this, please subscribe and hit the notification bell for regular updates. Thank you and enjoy the upcoming video clips.
Rather than making countries thinking they should consider a gold standard, I think for most of them it's a question of protecting themselves against the changing conditions which are obviously happening. I mean, we're moving away from the sort of the post-Bretton Woods era into what Zoltan Pozsar called Bretton Woods III. In other words, there's a new era coming which at the very least is going to look like the 1970s, with instability in terms of purchasing power for fiat currencies. And I would agree with that, and I would say that there is an increasing likelihood that this leads to the collapse of the fiat currency regime entirely. But let's not go there for the moment. As to your question as to whether other countries are considering a gold standard, I have no doubt that China is considering this as well. But China does not. It takes a sort of evolutionary approach to matters. She doesn't sort of rush out and suddenly do things, as it were. Her strategy basically is to let others make mistakes. And America has been making all the mistakes, and China just sort of sits there. Nothing to do with us. We're just running our own affairs. And that's a sort of Confucius approach, if you like, Confucian approach, which actually is very much in the government psyche. I reckon that since 1983, when they first started accumulating gold, because they appointed the People's Bank specifically to do that, and I've got the original articles, which I'll put on my Substack, actually, that's a good idea. The original legislation appointing them. Now, what they did basically was they controlled the foreign exchange flows because no one in China could buy foreign currency. So everything had to go through the People's Bank. They siphoned off some of that. You had capital inflows in the 80s, and then you had increasing exports. So you had a balance of payments bringing in foreign currencies. So between 1983 and 2002, I reckon, looking at those flows and all the rest of it, and contemporary prices, and remember we had a massive bear market in gold, which took it down to under $300 in 2002. I reckon that China could have accumulated by then something like 25,000 tons of gold. Now, there are various other indicators that she had been doing this, such as her policy towards gold. None was allowed to leave the country. And it's still the case, incidentally. And furthermore, she invested very heavily in mining capacity and refining capacity, so much so that China rapidly became the largest nation by mine output, gold mine output. This tells me that they do understand that gold is money and the rest is credit. They understand this at the highest levels. I mean, don't ask President Xi, ask his advisors. The reality of the situation is that the situation is getting beyond anyone's control. And, the officials in any central bank are having, they must be having sleepless nights as to how to deal with this upcoming situation. Just imagine that you are Jay Powell in the Fed. What do you see? Forget the statistics and forget the propaganda that you put out and all the rest of it. But the truth of the matter is that you're seeing debt getting out of control, government debt getting out of control. They have, the Fed, through its regional offices, has a pretty good grasp of what's going on the ground around the country. Though it doesn't necessarily tell you what it knows. This is the information which it needs to inform itself. It can see that the whole thing is going down. It knows the situation with the banks, which is why it had to rush in and rescue the regional banks from the losses on their bond positions. I mean, what bank actually, in the old days, would buy bonds with a maturity of more than 1 year? I mean, this is just complete lunacy. But you had, with zero interest rates, everybody was misled, including the Fed itself, incidentally. Because, one point I would agree with you on is their grasp of economics and grasp of difference between money and credit is perhaps sadly lacking. Their grasp of the role of interest rates is definitely lacking. These guys are in real difficulty. As to the debt trap, well, you're holding this interview in Japan, from Japan, while I'm in Britain. The Japanese government has got something like, 260% debt to GDP, and the central bank is underwater big time with its positions in not just short-term government debt, but also long-term government debt, 10-year JGBs and even 30-year JGBs. I calculated at one stage, when I think when the 10-year yield was up about sort of 0.75%, that the negative equity on the Bank of Japan's balance sheet was something like 4,000 times its capital, i.e. This is, so the whole system is actually in enormous difficulties. And if you look at the Japanese commercial banks, many years of trying to create profits out of a situation of negative interest rates means that they have increased their leverage in order to generate a reasonable bottom line. So that leaves them over, with a debt to equity ratio of over 20 times. This has never been seen before. It is that serious. So, the debt trap, basically, it's one thing, if you've got, say, 260% debt to GDP, and you keep interest rates at zero, which incidentally is why they're at zero, but anyway, we'll just gloss over that point. That's not a problem. But as soon as they start rising, Houston, you got a problem. And we're seeing this not just in Japan, not just in the Eurozone, but also in the United States. I wouldn't be surprised to see US Treasury debt approaching the 40 trillion level at the end of this calendar year.
Following the Federal Reserve's recent intervention, which hinted at impending economic challenges and possible rate cuts, regional bank stocks experienced a notable upswing. Meanwhile, on a global scale, central banks, Russia included, are considering the adoption of gold standards as a defensive strategy in response to evolving economic conditions, with the objective of diminishing the purchasing power of the US dollar. What are your insights on these emerging global trends?